Welcome to another S&P 500 analysis. This is the weekly edition, and today is July 30th, 2023. The market did what it is designed to do last week, and that is generate greed and fear. And looking at this chart, the post-FOMC announcement created this roller coaster for the market participant. And with the earning from Meta, it got the bulls going again. Then with the 10-year yield moving up above 4%, the bulls are trapped and the bears are having a field day, and we see the S&P 500 came back down and trapped a lot of the longs. Then the table was turned once again when a better than expected PCE report came out before the open on Friday, and the S&P 500 ended near the high when Jay Powell was holding his press conference. So was last week price movement setting up a bull trap or a bear trap? In this video, we'll try to see what the market is telling us by looking at the market sentiment, market internals, the price action of the S&P 500, US dollar, 10-year yield, oil, silver, and gold. Stay tuned. Before I begin, let me bring your attention to my Substack Newsletter page. I have recently added a daily trade plan section for the S&P 500 ETF, the SPY. You can see what I'm watching for the next day on the SPY for possible trade opportunity. Just click on this trade plan tab and you will see all the trade plan I have posted. In addition to the trade plan, you will also find additional contents from me on the market and on the FANG stock and other posts that I put up. And as a subscriber, you will also be able to participate in my chat room and see my intraday posts. So go check out my Substack page after you finish watching this video and be sure to subscribe. I have placed a link in the description below. Now let's take a look at how the index had performed last week. As you can see from this chart here, the Dow Jones Transportation was the top performer last week. It gained almost 3% and over 460 points. And the Nasdaq 100 was the second top performer, gained 2.1% or 225 points. And also the Nasdaq Composite gained 2% or 283 points, with the Russell 2000 gaining 1% or 21 points, and the S&P 500 gaining 1% with close to 46 points, while the Dow Jones Industrial gained 0.66% with 231 points, and the New York Stock Exchange Composite gained close to 0.5% or 74 points. Looking at this weekly chart of the S&P 500, we see the range is holding pretty steady at 78 points, and it closed above this 10-week and also the 40-week moving average, and it is still continuing one time framing up. And also notice that it is up 3 consecutive weeks now, and also close at a new 52-week high. And looking at the sentiment chart here, we see the VIX is still below the 14 level, sitting around 13, and it is 13.33 as of close on Friday. And the put-call ratio is near this 0.75 level here, so the market participants are still complacent and still risk on. And the up-down volume ratio acted accordingly last week when we saw a market sell-off. We got a little bit more negative on the up-down volume ratio. And then when we saw this rally on Friday, we also saw the up-down volume ratio turn positive. Likewise, the daily advanced decline, we saw broad market participation on the downside on Thursday and on the upside on Friday. The new 52-week high still outnumber the new 52-week low, and that is showing not too many stocks or near the 52-week low. And on this cumulative AD line in the New York Stock Exchange, it continued to move up, and it is continue to show positive divergence with the S&P 500. So that kind of tells us that there's a high probability that we could see a higher S&P 500. We saw a strong recovery rally from the Nasdaq on Friday, and the up-down volume ratio was over 5-to-1 in favor of the up volume. And the daily advanced decline also showing the advancing stock outnumbered the declining stock by 2,065. New 52-week high still outnumbering the 52-week low in the Nasdaq market as well. The negative divergence between the cumulative AD line and the Nasdaq 100 still remain to be a major concern and is still waiting to get resolved. Now, looking at the 10 versus 2 yield curve, it is still pointing to a recession as it is sitting at minus 0.92. So anytime we see this yield curve is negative, we say the yield curve is inverted and a likelihood of a recession is high. And on this 10-year yield chart, we see that it went above 4% after the Fed hiked the interest rate by another 25 basis points. And the expectation is for the rate to hover near this 4.25% until the Fed switch to a hold mode. Not a pause mode, but a sign that it will stop hiking and will hold until it's time to reduce. And Fed Chair Powell has indicated reduction might not occur until 2025 or later in his press conference last week. And the dollar moved up a little bit last week and got close to 102. And the dollar future is showing us that it's inside of this balance area here. So we could see that the dollar future bounce around between this 100.80 to 102.40. And oil is continue to creep up toward this 83 level. And silver is sitting right above this composite point of control. And we could see silver possibly move up to this 2670 area. We also saw gold went back above the 2020 level before it sold off again and back off away from the 2000 level. So we're still looking for gold to move higher. And once it breaks above this composite point of control here up above 2020, we could see it come up to this level somewhere near the 2037. Now let's go take a look at the price action of the indexes and see what we could expect for the coming week. And starting with the S&P 500, look at the S&P 500, we noticed on Thursday a gap up and came up and hit the upper range of the expected move. Then on Friday, it came back up after the sell-off on Thursday, came back up and closed near the upper range of the expected move. And for this week, the upper range is between 46.45 and 46.31.60, and the lower range will be between 45.32.80 and 45.20. So right now we are looking at the price action for the coming week to see would it be able to stay above the FOMC, what I call the scene of the crime level at 45.55.64. If we could see the price stay up at this FOMC level here, then we could see the S&P 500 work itself back up to the upper range near the 46.37 area. Now, if it dips below and unable to get above the FOMC level, then we could see price come down to the lower expected range and watch for this 45.12.94 or 45.13 level. And if it breaks this level, then we could see it possibly come back down to this gap fill here, which is somewhere around 44.50 and 44.40 area here. And the Nasdaq 100 also sold off on Thursday after having tagged the upper range of the expected move. Then on Friday, it came back up and closed right near the bottom of this upper range of the expected move. So for the coming week, the upper range is between 16,123 and 16,032.70. And the lower range is between 15,469 and 15,390. So what we are watching for is to see would it be able to continue to move up toward this upper range at this 16,017 area. And if it could not take out Thursday's high or the Friday's high of last week, then we'll be watching for the price to possibly work itself back down to this lower range near the 15,500 area. If it dipped below this 15,265, then we could watch this gap possibly get filled and come back down and check the 15,000 level. And the Russell 2000 continue to consolidate here, basically balancing up here. So we're still looking for the Russell 2000 to possibly get above this 2000 level and maybe move up to this pivot high here at 2028. Now, if it break this balance area on the downside and dip below the 1950, then we'd be watching for it to come back down to this 1925 and possibly fill this gap and check this 1906 level here. And for the Dow Jones Transportation, we saw that it was the top performer last week, and we continue to watch the Dow Jones Transportation to move up. Remember, we talk about this inverted head and shoulder pattern, and right now we're looking at this major move. This 80% and the 100% move could take us up to a new all-time high if it get above the 80% major move. So the 80% is sitting somewhere around 18,000, and right now it's sitting near the 16,700 level. So continue to watch the transportation to see if would it be able to break above this pivot high here and work itself toward this 18,000 level. And for the Dow Jones Industrial, although it was not a strong performer last week, but it is still trying to inch its way back up. And we're monitoring to see would it be able to get above this 35,500 area and push us up into this 36,000 level and try to take out this pivot high. And if it does, we can see there's a low gap here to get filled, and also the possibility of coming up to this 36,500. And the New York Stock Exchange Composite Index is still holding up above this 16,250. So if it could get above this 16,500, we could see a possibility of moving up to this 16,880 or 16,900 level and try to take out this pivot high. So are the bulls being trapped or the bears being trapped by last week's price action? Well, from the sentiment and the internal, we did not see substantial changes from the recent pictures. The market participants are still being complacent and risk on, but are not all bowled up and getting euphoric. The cumulative advanced decline in the New York Stock Exchange is still showing positive divergence, and that's a sign of potentially more upside for the S&P 500. But the cumulative advanced decline in the Nasdaq market is still quite negative, and we need to see how the reshuffling of the mega cap tech stock weighting will help resolve this divergence. Finally, we are also noticing some sector rotation taking place, and that could help keep the current rally going for a little bit longer. So the bottom line is, no, there was no trap being set last week, just the normal short-term shake and bake. Until we see a change in the current trend, the near-term trend remains to be positive. And if you find the content in this video is useful and informative, don't forget to smash the thumbs up and share this video. If you have not subscribed to this channel, show your support by clicking the subscribe. Thank you for watching and good luck.